Hello, everyone. Welcome to the Thursday, March 27th edition of Market Opening Bell. Boosted by stocks such as Xiaomi and BYD, Hong Kong stocks rebounded on Wednesday. The Hang Seng Index opened 116 points higher and rose as much as 252 points in the early session, reaching a high of 23,596. However, gains later narrowed to just 6 points at 23,350 before closing up 139 points or 0.6% at 23,483. The Hang Seng China Enterprises Index rose 38 points or 0.4% to 8,654, while the Hang Seng Tech Index gained 55 points or 1%, closing at 5,573. The total market turnover fell 30% from the previous day to 1,199.7 billion Hong Kong dollars. Meanwhile, mainland Chinese markets closed slightly lower, with the Shanghai Composite Index dropping 1 point to 3,368 and the Shenzhen Component Index falling 6 points to 10,643. Combined turnover in Shanghai and Shenzhen total 1.1542 trillion yuan, down 104 billion yuan from the prior day. The renminbi midpoint rate ended a four-day decline, reaching a near one-week high of 7.1754 against the US dollar, up 34 pips from the previous trading day, the highest since March 20. On the news front, the Ministry of Commerce will launch over 120 catering consumption promotion activities, including events like Enjoy Exciting Events, Savor Chinese Cuisine, Taste Gourmet with Movies, and Chinese Food Market as part of its Plus Cuisine initiatives. It will guide regions to integrate traditional festivals, peak consumption seasons, prime movie periods, major events, and cultural and sports activities to create a matrix of catering consumption events, fostering new hotspots for dining consumption. Catering stocks saw gains. Haidi Lao rose 1.02 Hong Kong dollars or 6.1% to 17.62 Hong Kong dollars. Jiu Maojiu gained 0.06 Hong Kong dollars or 2% to $3.03. And Yum China increased 13 Hong Kong dollars or 3% to $405. Earning highlights: Bank of China 2024 operating income reached 632.7 billion yuan, up 1.4% year-on-year. Net interest income fell 3.8% year-on-year, with a net interest margin of 1.4%, down 19 basis points. Non-interest income grew 16.65% year-on-year, accounting for 29.05% of operating income. Loan impairment losses for the year were 120.8 billion yuan, up 13.9% year-on-year. Net profit was 237.8 billion yuan, up 2.6% year-on-year, exceeding market expectations. The final dividend is 1.216 yuan per 10 shares, combined with an interim dividend of 1.208 yuan per 10 shares, totaling 2.424 yuan, up 1.5% year-on-year. China Life Insurance 2024 operating income was 528.6 billion yuan, up 53.3% year-on-year. Net profit reached 106.9 billion yuan, up 131.6%, with earnings per share at 3.78 yuan. A final dividend of 0.45 yuan was declared. Total premiums grew 4.7% year-on-year, with a total investment return of 5.5%. The value of new business for the year surged 24.3% year-on-year. Pop Mart 2024 revenue hit 13.038 billion yuan, up 106.9% year-on-year. Net profit soared 188.8% to 3.125 billion yuan, with the gross margin improving from 60.6% to 63.9%. Earnings per share were 2.36 yuan. The final dividend was 0.8146 yuan, nearly 1.9 times higher than the previous year. Mainland China revenue reached 7.972 billion yuan, up 52.3% year-on-year, while Hong Kong, Macau, Taiwan, and overseas markets generated 5.066 billion yuan, up 375.2%, accounting for 38.9% of total revenue. Chairman and CEO Wang Ning expects the group to achieve sales exceeding 20 billion yuan in 2025, a year-on-year increase of over 50%, with overseas in Hong Kong, Macau, Taiwan sales surpassing 10 billion yuan, doubling from the prior year. The North American market is expected to reach the group's 2020 sales level by 2025. Companies announcing earnings today include SMIC, Hua Hong Semiconductor, Postal Savings Bank, PICC, New China Life Insurance, CNOOC, Air China, Haier Smart Home, and Li Ling. US stocks fell, ending a three-day winning streak. Trump is expected to announce new tariff measures, including additional tariffs on automobiles. The Dow Jones Industrial Average swung from a peak gain of 234 points to a maximum drop of 260 points, before narrowing its losses to close down 132 points at 42,454. The Nasdaq closed at 17,899, down 372 points or 2.04%, while the S&P 500 ended at 5,712, down 64 points or 1.1%. The Nasdaq Golden Dragon Index, which tracks Chinese stocks, rose 0.72% at the close. Among them, Alibaba fell 0.38%. The Hang Seng Index Night Futures closed at 23,418, down 29 points, trading 65 points below the Hang Seng Index cash market close. Magnificent Seven all declined, with Tesla dropping as much as 7.5% during the session before closing down 5.6% at 272.06 US dollars. Nvidia fell by up to 6.6% and closed down nearly 6% at 113.49 US dollars, making it the worst performing Dow component. Reports indicate that China's National Development and Reform Commission has recommended Chinese companies adopt chips meeting high energy efficiency standards, which could prevent Nvidia's H20 chips from being sold in China. Alphabet dropped 3.2%, Meta fell 2.5%, Amazon declined 2.25%. Microsoft slipped 1.3%, and Apple edged down 0.99%. On the economic data front, U.S. durable goods orders for February unexpectedly rose by 0.9% month-on-month, surpassing market expectations of a 1% decline, following an upwardly revised 3.3% increase in January. However, orders for non-defense capital goods excluding aircraft, a key indicator of business spending plans, fell 0.3% in February, marking the first decline in 4 months and underperforming the expected 0.2% growth, after an upwardly revised 0.9% gain in January. Uncertainty surrounding tariffs may impact corporate spending on equipment. Our stock pick today is ANE, stock code 9956. ANE primarily operates an express freight network in China's less than truckload LTL market, providing timely and comprehensive freight transportation services as a nationwide LTL service provider. With the accelerating digitization of commerce and trade in the Chinese domestic market, coupled with the rapid rise of cross-border e-commerce, every segment of the supply chain, from manufacturers to distributors, merchants, and retailers, requires fast and high-frequency inventory turnover. This can only be achieved through integrated and efficient freight solutions that transport goods to warehousing facilities and stores near end consumers. This in turn has created significant demand for nationwide, timely, comprehensive, and reliable LTL services. Leveraging its extensive national network, the group offers comprehensive and diversified product services tailored to the preferences of different end customers in terms of network coverage, timeliness, service quality, and pricing. As of December 31st, 2024, the group operates 82 self-operated sorting centers across China, which together with its network outlets cover approximately 99.3% of counties and townships in China. Its self-operated fleet consists of over 3,600 high-capacity line-hauled trucks and more than 6,300 trailers. Additionally, the group collaborates with over 33,000 fleet partners and agents, serving more than 6.3 million end customers across China, compared to approximately 5.5 million as of December 31st, 2023. In 2024, the group handled a total LTL freight volume of 14.1 million tons, a year-on-year increase of 17.5%, driven by growth in mini-ticket and small-ticket LTL shipments. The total number of shipments rose by 31.1%, from 128 million in 2023 to 169 million in 2024, while the average weight per shipment decreased from 93 kilograms in 2023 to 84 kilograms in 2024. These trends reflect the group's strategic optimization of its fleet weight structure, as small ticket LTL shipments command higher unit prices and profit margins, require higher service quality, and have greater demand for value-added services. In 2024, the group's total revenue increased by 16.7% year-on-year to 11.576 billion yuan, with gross profit rising 45.2% to 1.841 billion yuan, achieving a gross margin of 15.9%, up 3.1 percentage points. Profit reached 761 million yuan, up 87.1%. Adjusted net profit was 837 million yuan, a 64.2% increase, with an adjusted net profit margin of 7.2%, up 2.1 percentage points. In 2025, the group will continue to enhance channel empowerment and upgrades, leveraging digitization to implement its five most goals: the most dense network coverage, most optimal costs, most superior quality, most stable timeliness, and most timely service response. The recommended buy price is 8.2 Hong Kong dollars with a target price of 9 Hong Kong dollars and a stop loss level of 7.7 dollars. I personally do not hold the aforementioned stock.